The aftermath of the 2008 financial crisis seems to pose unprecedented new market dilemmas. While current events may appear different from the past, there are nevertheless lessons to be learned from what went before. With their analysis of data over 112 years of history and across 19 countries, professors from the London Business School, together with Credit Suisse experts, provide important findings on these lessons in the Global Investment Returns Yearbook.
The origins are a book that we published at the beginning of the 2000s called Triumph of the Optimists, which plotted the performance of stocks and bonds and cash, a variety of assets, in each of a large number of countries. So what the yearbook and the source book do, taken together, is to provide us with a long-term history from which we can form views about how markets behave, how assets behave, what their long-term performance is, and what their risk is.
So how has the global business cycle changed since the 2011 report?
I think looking back on the history of risk and return we find in the Investment Returns Yearbook, the new development really last year has been the fact that a small number of countries, we would call them, say, true sovereigns, Britain, Sweden, Switzerland, Germany, really have played a role as really true safe havens. The US Treasury market as well, of course. Yields have compressed down to very, very low levels historically if you look at the comparative evidence in the Investment Returns Yearbook. So that has been one of the key trends.
We asked the professors how the market performance of 2011 might be seen in a historical context.
During 2011, stocks performed very differently from their long-run historical average, and it's interesting to look at the historical picture. During 2011, the year started really well, but then in the second half of the year, financial markets hit acute financial stress. There was a flight to safety at that point. That meant that by the end of the year, bond markets had done extremely well, and bond yields in most of the developed markets were at amazingly low levels. Over the year as a whole, bonds outperformed equities by 23%, which is a staggering margin. That's not the way it's meant to be. Historically, you're meant to get a higher return from equities because they're higher risk. And our long-run research shows that if you go back to 1900, bonds have actually underperformed equities in every single country.
The question we put to the data is whether, after disappointing performance, there's a rebound or whether the disappointing performance continues as a trend. What we find is that after a period of disappointment, there is a very slight tendency for there to be superior performance.
With 2012 now showing signs of a reversal of fortune for equities, we asked whether previous evidence for this exists following a prolonged period of poor returns.
We've actually had one of the best January months on record in recent years, and that holds some promise for the rest of the year. And it suggests that while I think it's going to take a long time to get to grips with Europe's structural problems with indebtedness as a broad issue, the market is beginning to price in some of the implications of this for the rest of the year ahead.
Last year, currency concerns were to the fore. We wanted to know whether currency risk should deter investors from diversifying globally.
Currencies were volatile last year, but when you look at history, they weren't especially volatile. They're always volatile, and currency risk is something investors need to live with. But it should not put investors off from diversifying globally. If you look at equity investment over the last 40 or so years, there have been very large gains from diversifying internationally in terms of reducing risk. You would have reduced your volatility by about 20% from holding the world index rather than just investing at home.
The yearbook is just one of a series of publications from the Credit Suisse Research Institute that links the internal resources of our extensive research teams with world-class external research. Visit the online publication shop to download the latest reports.